In this video, traders, we're going to look at more ways to get on board trades that you have missed. Stay tuned. Hey traders, very warm welcome to you. Okay, so imagine this scene. You've been looking at this market, you've been looking at this stock, this commodity, this index, whatever it may be. So you know what, this thing's going to rip to the highs soon. I'm going to get long. Next day you look at it, it's gone. It's ripped off, it's powered off. You think, I missed it. I was on the ball with it. I was ready to get on it and I missed it. Okay, so this happens a lot of the time. How do you avoid it? Well, first thing is first, before we look at this, sort out the process for you taking the trades. If it's something that you've earmarked but you've missed, you need to add another process in to make sure you're checking it and make sure you're at least trying to get on board it if it's setting up for you. If it's something that you haven't looked at but it's ripping off and you think you've missed it, then this still applies. But add that first layer in first to see if you can catch those initial moves. But if you missed it, let's have a look at ways we can get on board it even after it's gone without us. Okay, first one is pullback. Talked about this one before. Let's give it as a refresher. We've got the situation, we're driving up, it's gone on and on. Just wait, wait. So you know what, I can get on board this, but I'm gonna wait for a pullback. Now, a good way of doing that is to use a percentage or a fib tool or something where you're quantifying the distance. So you're splitting up into quadrants, you're splitting up into thirds, whatever it may be. Just split it up, and of course the further it goes, the more stretched those quadrants, those fib extensions are going to be. But the point is, at least you have a place where you can just put your limit order in here and you can just keep moving it up, moving up. All you're doing is moving up as it goes. Then when the market does finally pull back, which it will pull back, you're going to get filled on that. Now, are you going to get filled on it and just reverses? That's part of the game of buying pullbacks. You just don't know. As long as you're quantifying your risk, perhaps you're having your stop here or whatever it may be. The good thing about this, guys, is that it gives you a plan. You're not chasing it. You've got a level. Yes, you're going to have to drag that limit up every day, every time the market's ripping off, but it gives you a level to get into the trade. It means you feel like you're doing something. So it removes the kind of problem that you're thinking, I've missed the whole trade. I'm missing it. It means that you're not missing it. You're on it, but you're waiting for that sweet spot, that opportunity to actually take the trade, which is what you want. All right, so that's a good one to look at. That's an easy way to do it. Structure it in with your fib or with your quadrants or thirds, whatever you choose, just a very simplified percentage pullback thing, or a fixed number of ticks. You know, 50 ticks, 50 pips, 100 pips, 200 pips, relative to the distance it's moved, which is the same kind of thing as percentage, but you know, you're not going to be adjusting it going 51, 52. You're going to say, that's a fixed amount. I want to see it pulling back. All right. Or actually, finally, before we move on, you can say, hey, I want to see 2 red days. If you see the massive green, say I want to see 2 red days, I'm going to buy on the second close of the red candle. Something very, very simple. There's no need to overcomplicate it. You're waiting for that just unwinding of the supply demand to shift to get on board it. All right, that's that one done. Second one is pin bars. Pin bars. You know, basically we've got the situation where, you know, we've pushed up and pushed up. You know, we might get a kind of day that pushes down, and what a pin bar would be is something that's got really a kind of long tail to it, but a very small shadow if we're looking at it from a candle perspective, or if it's just a bar, it's going to be where the open and close is near the highs. In other words, it's an intraday change in sentiment. You know, if you can see this is the intraday chart, it's pushed down and it's pushed back up again. So if you see that kind of thing, then you can get on board, get yourself along, get your stop under that intraday low, use that as a kind of way of getting involved. Now you can add that, combine it with things like support and resistance levels. So let's say you have your support here and it dips under the support, then it closes back above, even better. But that's one good way of doing it. Looking at that intraday reversal, looking at a flush to the downside, pushes back up, say, yeah, I've got that. I want to get involved in it. I want to take the trade. So pin bars, candlestick patterns, whatever you want to call it, it doesn't matter. We don't need to get, you know, very, very precise about it. The point is something that indicates a short-term change back up in the direction that you want. All right, number 3, moving averages. We can use a moving average just as we're using with a standard pullback. So we've got our situation here. I've got a nice color pen for you. Let's go with a purple pen on this one. We've got prices pushing up. I've dropped it. We've got price pushing up, blah, 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 blah. All very nice. It starts to kind of roll back. We've got, let's go with an orange instead as I've dropped the purple. We've got our nice moving average here, whatever time frame that may be. Maybe it's a 20 period on a daily, maybe it's a 50 for a deeper pullback. 10 and 5's a little bit aggressive. 10 perhaps if it's a really, really monster trend. 5 will get you on really animalistic trends like blasting. You've got green, 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 green. The five's there. You might get a close below the 5 once, and then you're on it. Now you've got to be careful of that because that is really, really aggressive trade, but it can happen on the right conditions. But let's talk about a normal thing that's chugging along. You know, your 20 is going to be a good one. 50 is probably too far in my opinion. Maybe you're going to get down the second pullback. 10 or 20, depending on how kind of aggressive and kind of how much of an angle the trend is. So that's something that's worth doing, and it's easy to do as well because you can literally just monitor it and say, hey, that's moving average I want to buy at, that's the time I want to get involved in it, and so I'm going to wait for that. And it just keeps you from chasing the thing, because that's part of the game really with this. Is don't forget, because you're frustrated because you've missed it, you're annoyed, you just think, oh, I've got to get on board it, but really any of these things just mean that you're waiting, you're doing something which pleases that inner chimp in your mind. It pleases the kind of person that's saying, oh, I've missed it, saying, well, you're doing something. You're planning for it, you're waiting for the next opportunity. And that's half the battle, because many times we feel like we've missed something, we're going to chase it and end up doing more damage. Not only have you missed it, missed out on the profit opportunity, but you've chased it and you've got hit and you've got a loss to show for it. All right. What have we got here? Short-term, overbought, oversold. So we could be using a stochastic, or we could be using a RSI, CCI, anything like that. Any oscillator kind of indicator that we're probably familiar with. If not, I've done another video. Go and check it out on the channel. We normally have this situation. If we're using an oscillator, and I say it could be any one of these ones, we kind of go from here, we sit in overbought conditions, maybe we come back, and then on the lower time frames, on the daily, maybe not so much, but on the lower time frame, let's say it's gone ripped up the upside on a daily, on a 15-minute or an hourly, we're going to see this where we get into an oversold condition. That's, you know, in the lower section, depending on what indicator we're using, and then it starts to roll up. Bing. Bingo, should I say, bing, whatever, ding, bingo, let's go. The point is we're buying as it comes off that low oversold condition back into a neutral condition. Does that line up with that? You get the point. There's our buy entry there. So we're waiting for it to be oversold in the case of a ripping up trend on the 15-minute and then curl back up. Very easy to do. Again, we're doing something. This could stay overbought for a long period of time. When it unwinds, we get the oversold condition, comes back up, we pull the trigger, we put our stop under the low, whatever that may be, quantified our risk, we're ready for the next leg if it occurs. Great little strategy for getting involved in a runaway move that you feel you've missed. Okay, number 5, the final one, guys, and actually this one really is very powerful when you combine it with these others. So if you combine it with that pin bar, if you combine it with a tail on a candle, you know, whatever candlestick pattern you're using, combine it with the short-term oversold, all this kind of stuff. Really, we're looking for a support resistance level. So the market's pushing up, comes down, it kind of finds support, because, you know, trends aren't always clean. It kind of rips the upside. You feel like you've missed it. But this is the kind of thing that you now want to see. You see some support coming in here, and it's the first, the point is it's the first time support has been found. So a bit of selling pressure has pushed it from the highs. You found some support. You can say, you know what, now I'm going to buy it. I'm going to put a stop under my support. Just a little tip for you. Don't be too aggressive with that stop like here. That's a little bit too tight, because very often it's going to probe below. You might even get that pin bar through. You might get a little test through that pushes back up. Either you wait for that to happen and do that even better, or give yourself a little bit more room. You just give yourself a little bit more room, or you can say, hey, I'm going to use my stop on a close or 2 closes below. Just give yourself a little bit more room than you would. You've got the wind behind you. It's all good. The momentum's there. The trade's working, or the market's supply demand's in your favor. It's dipped back a little bit. Give yourself a little bit of leeway on this, even if you've got to dial down the position size. And that works as well nicely with, you know, you've got an oversold on a stochastic, or you've got even better. Let's say, imagine, you know, you're pulling up to a a kind of moving average and it's testing that as well. You've got the confluence there which you can work off. So more ways of getting on board those trends you've missed. The important thing is that you're doing something, you've got a strategy in place. That's the best thing. Even if you end up just not doing it because you don't fancy it, it stops you from chasing it, stops you from feeling like you've missed the whole thing, there's no opportunity left for you, and feeling bad about the situation. Structure a plan, structure a trade using any of these ideas, also any more in the comment section below that you guys have got, and then you can hopefully get on board it and get some meat out, some juice out the trade still, because that potentially still got a long way to run. If that's a genuine momentum breakout, the first pullback is the start of even just something big. We normally have 2 or 3 phases of that on proper momentum. So getting on that first pullback is a good trade in itself. All right, guys, if you like this kind of stuff, give it a thumbs up, much appreciated. Subscribe to the channel if you haven't yet already for more videos like this, and psychology and strategy and tips and all this kind of stuff, just general trading stuff that hopefully is going to make us all better traders. That's #1 goal. All right, guys, take care. See you in the next one. Goodbye.